I am live, supposedly. Dun, dun, dun. Stream health, good. Adio. All right. I think we're good. What's up? Anybody? Everybody. Oh my gosh. What's up, Velocity and Stone? It's going well. I mean, what a insane, crazy week. Uh Man, gamma squeezes, right? And just totally the crazy thing about it is like everything I play feels super safe. It feels like I'm doing what I'm supposed to be doing. Nothing crazy, but it felt like YOLO crazy gains today. So, or not today, I guess this whole week. I think it was a long time coming though. Like I don't know. I don't know how old you guys all are. I think I'm like all my stats like way younger than me. Um, but I used to play these games like the original. So like I know there's like World of Warcraft, but before that there was like just a really old one where it was where you kind of like manage these buildings, and first you start off with peons, and they would go out and harvest gold and lumber, and then you'd kind of build your city up, and then you'd make barracks and all kinds of like little buildings, and and then eventually like when you would build up basically your economy, then you would create this huge army and go out um, and go out and attack and just take over the world. Yeah, maybe Warcraft 3, 2, 1. I don't know which one it was. Um, but that's actually what I kind of feel like Tesla's been doing, right? Um, like they've just been, I mean, they're still in that phase too where they're just building up their like their resources. They're just putting they're all peons and just harvesting stuff. and um and basically just building up that base. They don't even need to go out and attack yet. They haven't. Like their economy and their forces are so strong, and not everybody saw that. And now, like kaboom, people are starting to realize that. Like they're looking over there, like this dude has a huge force. He hasn't built a bunch of barracks or anything. Doesn't have a huge military, but it's straight up scary. And I think that's the thing that kept coming to mind. Yeah, like Warcraft or um, what were they like? Command and Conquer. They're all kind of like similar style, like StarCraft, like all those things. But just building up this huge economy, and now they can just go out and do whatever. But yeah, premiums are still awesome. That's a crazy thing. And like thankfully right now, right, we can still get like 10% premium. Um, and I don't even, I was, where was it? Like down in the 800s or something like that, $300 worth of runway. Command and Conquer. Oh, for the Tesla towers. Yes. Yeah. Yeah, totally. But I think I was fully expecting yesterday, Friday, for there to be a bit of a dip just because of the gamma squeeze that's happened, and the trading is insane. Like if you look at any of the stats, um, you know what? Just gonna make myself bigger. um, but if you look at any of the stats, um, like there was more trading within the Tesla options than Tesla stock itself, which is just crazy. And I can't remember what percentage of the overall market was just going into Tesla. It was just crazy. Um, yeah, insane. And I'm happy all you guys that are in it, like awesome. I have like on my Robinhood, I have a few debit spreads, but I've got I can't remember if I posted it or not, but I wish obviously everybody wishes they had some like deep in the money calls on Tesla right now, right? Like hindsight 2020, but I have an 850 2023 call in June. Like that thing's insane. I paid $15,000 for it when we were, I think, sitting at 600s, maybe like after that little bit of dip, and now it's 40,000. Wish I would have done a few more of those, but that's insane. If I was grabbing any more calls or leaps right now, 100% would do. I would probably do some debit spreads because I mean, I don't know. That's just my thought, but especially if you have any time on them too. Like even the debit spreads that I have, they're not 100%. Like even the ones that are at 1,000. Um, but yeah, yeah. A lot of people. It's crazy. Like a lot of people have been talking about this. Like people that do the spies or SPXs, um, all those. Like the premium just hasn't been good, and a couple of my friends just been getting rocked on them too, especially like on the top side where they're doing like iron condors on them and just having to roll and roll and roll every single week and really getting rocked on them, which sucks. Um, yeah. Tesla, yeah, Tesla just going opto. And I think since we didn't see a pullback yesterday, I think we're gonna set up for a total another gamma squeeze next week. My my only the only thing that sucks is like I'm super happy with it kind of trading sideways and melting up slowly. That way we can just keep collecting premium along the way. And part of the reason I did so well this week was um, just because we were able to close out those lower ones, take all that profit and roll them up or roll them out a little bit. Um, but the nice thing is, even with as crazy as it's gone, you can still be playing at a safe place. But when it 1100 really isn't even like a technical level at all. Um, the fact that we even kind of sat around there for any period of time, we only tested it, I think, once or twice before breaking out above it. Um, but I mean, I was thinking next year we're trading 12, 15, 16, $1,700 or something like that. So man, next year is just gonna be nuts. And hopefully we don't see the volatility slow down so we can still grab our premiums. And I need to like pare down that account too. I like honestly, part of me is kind of feeling like like I don't know why. I know like 100,000 is a lot, 200,000, but now it's like 300, and if we keep going like this, it's going to be 4 or 500, and it kind of starts to feel like dick levels where I'm like, hey, I have $500,000 sitting here from not much, like it, and I think like there it doesn't seem so obtainable, even though like obviously we did it with $500. So yeah. So hopefully everybody grab some. What's up, SPC Rob? H Man Stone Velocity. Um, so what are you guys doing? Let's see. So 7 days till expiration when it was 1040. I got a $50 spread. Awesome. 50 spreads. Feel a lot safer than doing them on Tesla than SPY. Yeah, plus the premium is there. Yeah, you just go all in though, but might as well. There's no reason not to. I yielded my whole Roth into Tesla like a month ago. Yes. I'd taken a look at some of my accounts that I just have like kind of a basket of stocks in, and I moved some of it. Obviously, now everybody wish I would have. I wish I would have. Nothing wrong with that. And even like one of the things we definitely have to kind of prepare for is it could have a pullback. I mean, like even the Robinhood with whatever 200 and some shares, like if we do see 900s tested again, but I just don't see it. Like I think that's the last time we saw 800s or 900s, everybody waiting for a pullback. That's not going to happen. But if it happens to and it goes down $200, like that's what is that? That's like a 40. That's going to see like a 40 or $50,000 dip in my account. But I think overall, like even the let's see, where is my Robinhood? I think today today did lose, just like lost on crypto. But I think even if we do have a pretty crazy dip, long term, it's just gonna end up like looking like one of these, which were at the time massive. Like that was a massive dip, 20 grand, like uh, from 185 to 150. That was a $30,000 dip, massive. But as they keep going on and keep just stacking the underlying, like now it seems like that was like nothing, just a little tiny tick. It doesn't really even matter anymore. And I hope we all get there too. Like, a couple years from now, $30,000-$40,000 dip is nothing. I feel like SPX needs a pullback and is walking a tightrope. Yeah, and even like Friday, all the SPY underlyings, that was crazy. Apple, that was crazy during the day on Friday. That was insane. Yeah, it definitely does. It needs a pullback, especially for all my guys who are doing iron condors or have call credit spreads that they rolled out on it. Yeah. And I think with the FOMC, I think it's next, I want to say Thursday or Friday. Hopefully, like with some of the taper talk, hopefully we'll see some pullback there. But it really doesn't matter. Like, at all for me now. I love, like, I couldn't have timed it any more perfect. The fact that I wanted to get out of all that crap and just focus on Palantir and Palantir and Tesla, couldn't have been more perfect. Like all that money went into there. But now I just don't even have to worry about it. What's up, Kojo? Hey, you're a Kojo, you're a gosh dang it, the stamper guy, right? Is that what I saw today? What is that called? I can't. I don't know, when you sign something and you get it like documented. I can't remember. Let's see. The 50 spreads 200 out of the money. Yeah, its average is 0.2. Oh, so you just opened up like a week out, make 1,000. We gotta get up to 420 spreads on Tesla. Dude, you know how many I have? No, not 420 spread. I don't have 420 spreads, but wait. We have where is it? 34 strategies? I'm playing 34 different strategies. Maybe only on the mobile it shows it, but I think I have 400 and some options on it. Something like that. What a beautiful chart. How do you think the FOMC meeting will be? I hope it gives some pullback. I just, and I haven't paid a lot of attention what's supposed to happen, since I think Tesla's taken all my focus this week. Like every day's just been absolutely mind blowing. Like I don't know. I don't even know what to say. Like seeing that day after day, that craziness. So I think we'll have taper talks, and hopefully that calms the market down a little bit. Like I would love for it to slow down. I would love Tesla to drop down to 1,000 or retest it or something. I mean, not for anybody that holds short-term calls on it or anything. If you had to do it over again, would you stick to put credit spreads to simplify things? Yes, 100%. But of course, like if I had to do it all over again, I still need to go through the learning process, and I still need to go through that to realize how I should simplify it, which is like, this hasn't been too long, right? Just a couple of years, but that's like that's my full circle right there. Was okay, get into it. Just probably like most of you guys, you watch YouTube videos, you check out everybody's strategies. I I sometimes I'll see like it'll show like people subscribe to my channel or watch your videos. These are the other channels, so I watch them a couple times. There's like one of them, I can't remember his name, but he puts out like these like, oh, here's another strategy where you could possibly turn $4 into 400 or $3 into 2,000, and like all these like they're super low probability and honestly like stupid things, but I learned them and then realized like how you have to manage each one of those differently. It's just too much, and I have a full-time job, so this is what I do in my spare time between other things, and just the ease of it. They're simple. They're so simple, and I don't think you need. I mean, if you have put credit spreads, I mean, you don't even. You could do call credit spreads, but put credit spreads, since in general the market goes up, makes way more sense to me. I don't need call credit spreads. I need call debit spreads, and maybe iron condors, just depending on what you want to do. And between those and a naked call and a naked put, I don't think you need any of the other crap. And to effectively use those, even like straddles and strangles, if you want to get into them, they're great for somebody who really pays attention to earnings. But if that's what you want to do, and some people gravitate towards them, and I know there's people that do those absolutely full time, then I mean that's good, great for them. But then you're forced to pay attention to whatever earnings are coming out. Like, you have to pay attention to all that stuff all the time. Make sure everything's meeting your criteria. Make sure the volatility is where you want it. And I don't know, it's just too much for me. And for me, because I love Tesla the company, I have no problem listening to all the news like surrounding it. Like, that's actually interesting for me. So even though that's the work that I put into it to be able to now benefit from it, it doesn't feel like work. It's like, it's the same thing as watching Netflix or whatever. Like, if there's a cool new video, like a cool new video that comes out and somebody's like has some new thesis or something, that's interesting to me. I mean, even like firsthand experience, since now I own one and get to see the difference. Oh yeah, Tech Conversations, yes, yeah. I'm your host, Guillermo, that guy. Yeah, I had so many people DM me about like, hey, I got into this this trade that I learned on that from that dude, and like, what do I do now? Like, how do I get out of it? And I know the ones I watch. He's like, make sure you do your own diligence and do it. But there's no reason you need 15, 20. I mean, like, literally, I think from what I saw, he must do them like every day. You don't need a new strategy every day. Like, how are you going to master that? Get good at one thing. Like, that's even professionally. It's not like you go out and you learn to play music, fly a plane, and build houses, and how to like mine coal. And like, you do one thing, you get really good at it, your value goes up, so you get paid more. Same thing, I think, with options. You just like, I mean, in the stock market, you study one thing, you get really good at it, you're comfortable with it. Like, just the comfort level when you know exactly how it's supposed to react based on what the market's doing. Like, if you take the difference between like a long haul butterfly and the market does something, and then you have no idea why it's moving like that. Like, why is it showing I'm down $300 on this supposed max risk $5 play, and you don't know what that is. You're just like, what the hell am I doing? I'm freaking out. And then just because you don't realize, like, oh, okay, that's just the difference between this tight spread that's way out of the money that doesn't have a lot of open interest, compared to just knowing exactly what that is, then you have complete comfort in it and confidence. Same thing we do with work. Like, I go look at the same stuff every day for my job. I mean, there's slight variations, but for me, compared to when I started, like when I started doing it, it was super like, oh, I don't know where to start here. Now I can pull up to something, see it, and I probably know like most of the things already about it just based on how it was built. Like this your house has these issues and this is what I normally can do. I mean, it's like a good doctor that specializes in a field. He's like, yeah, you're walking weird and you're this age and like you probably have a bad knee or something like that. I mean, you just get good at one thing. There, but initially trying them out makes sense just so you can, figure out what you're comfortable with and what your style is. Nothing wrong with, I mean, some people just play those 0 DTE, 1 DT SPXs for a living. Fine, great. And that's their thing. Different investors, like you look at the difference between like Buffett and Munger, like they're all value investors compared to Kathy Wood, which just looks for, like she's looking for the next biggest thing. They're both very successful, but Warren Buffett is not going to, you don't want him, he's not going to be the guy to go look for the next best thing. It's just not going to happen. They're both successful in their own rights for sure. All right. Little tangent. Okay. 420 contract. You usually open your spreads 20 to 30 days out and close the week of, right? Or are you, so I usually, yeah, I roll out the Friday before expiration. So like yesterday, I rolled out the ones that are expiring next Friday is what I've been doing. Roll them out another couple weeks. And yeah, I've been opening them up 20 to 30 days. I mean, that's really when theta's decaying really well. Yep, 10 conversations. Used to watch him a lot, but I don't anymore for all the reasons you're saying. Well, the crazy thing is what I noticed also is I think he begins every single video like go telling you to like, here's my paid Discord. Here's an example of a play we made, which we won on. And I swear, I think it's every single video that he says, here's a play that we won on today. That was a call out in the Discord that you can pay for. But his account, like while the market was going up, like everything was up, I feel like percentage wise, his like it didn't go up. Like proof's just not in the pudding there. Which if he was making a ton of money, and he's probably is making a ton of money, but the majority of it, I'm sure, is from his Discord, I would think. You started 2 years ago with $500 and have more than 300,000 now? Yes, I did. So, yep, we started off with 575, taking out 58,000. So total gain so far is $380,000. We started this account November 8th, 2019. So it's next week, it'll be 2 years old, but I didn't even trade for that first year. So really, I started trading in February of 2020 on this account. There's first few days, I just like bought a share of something or got my free share and didn't really mess with it. But this February 21, that's where I really started getting into it. And that's where I started, just being active in it. And then thankfully, huge silver lining. The big drop with the virus going around happened. Like that was just a silver lining. I had 6 weeks off from when my company shut down, and I put all my effort into it, just watching everything I could, reading everything I could. At that point, most of it probably didn't make sense, but like the couple weeks before that, so like literally 2 years ago, I could not explain to you a put credit spread 2 years ago. I I probably couldn't really explain a call or a put at that time 2 years ago. I think it was probably in the very, like at that point when I was really looking into Tesla or reading about it. I think my first real exposure was one of his Joe Rogan interviews. And just some of it was actually the stuff he was saying that was just plain good, like wanting to better the planet and humanity. And yeah, it was the one that he was smoking weed on. And then at that point, I was like Like, this is just a straight up good person trying to do the good. Like, he's not out there trying to make money. He really wasn't. That wasn't his main goal. And then, like, jumping into the, hey, Tesla's going to make um, whatever the, oh God, like the breathing machines that we all needed, trying to save the kids that were stuck in the mine. And I can't remember what country that was in. Like, just a super good heart. And I remember, because I was still learning about him, and I was talking to my girlfriend. I was like, you'll love this guy. And one of his things on the interview was I think Joe was like, if there's one thing you have to say, and he's just like, love will change the world. And my girlfriend says that all the time. She'll say, love will change the whole world. I was like, and then at that point she bought, I think, 200 shares in the Tesla, so that was huge. So that's what really got me into it. That, and then just because I drive a ton for my for a living, I just wanted something safer out there. So I was actually looking at either a Tesla or the Toyota RAV4. And then as I learned more and more, I mean, it just was an obvious choice after enough time. Actually, I rented a Model 3, made sure what I thought it was what it was, and loved it. And ever since then, I mean, here we are. Oh, let's see. I've had similar experiences with trying strategies that weren't working. You're an inspiration for simplifying the strategies. Thank you for sharing your insights. You're very welcome. Yeah, as a matter of fact, it's kind of cool to see, like, this was the very beginning of things right here. This little bump up, and then from April to June, this whole trading sideways. This was me trying out different strategies. So, I mean, what, from -4 to like -1,000. So I spent months trying different strategies, and I'd have winners, I'd have losers, and then after that, that's where I really honed in. I was like, put credit spreads. They just make sense. Stocks generally go up. Here's a stock that I like. It has fantastic premium, and I don't really care what it does in the short term. I know I have super high conviction where it's going in the long term, so I can always roll out. And that's part of why we've had such crazy gains this last few weeks. Not only the stock price, but I'm also coming up to where theta is actually decaying on the put credit spreads that I had to roll out for 9 months. So that's been a major upside. And also debit spreads that I took out forever ago that I paid like $100 for, and now they're worth 1,000. But that's just like when it all clicked, and I'm like, that's what I need to do. And I would still YOLO a little bit, here and there, and I'll still make a play or two, but then why? I mean, those gains on my silly little plays, they don't add up to much. But like the consistency of put credit spreads, even though like in this area we had a pretty crazy spike up and then back down, I still think that little hump is going to disappear. Like, give it a couple years, it'll just look like a little tiny bump in the road. How much did I lose during the Tesla drop? $120,000. Let's see. He's always talking about penny stocks too. Yeah, I think that was like, I don't even know if that's still a thing, just since now, like, one of the big things for me is I stopped listening to anybody, and you guys see the videos. I make my own plays, like, which is a huge step, and hopefully you guys too, just making your own decisions, your own plays. When I watch interviews with people who day trade and they've been doing it for a long time, that's usually where they take this huge leap, and like maybe they screw up sometimes. God, where was I going with that? Oh, the penny stock thing. But when I used to watch it, and I think it was part of that 2019, the end of it, like, you could pick, it didn't matter, like throw a dart at a company, and it went up because everything went up after it had a huge drop. So everybody looked very smart, looked like a genius. But I feel like that was almost part of the penny stock thing. I don't know if it's still like a thing, or or going based on like, oh, Kathy Woods just bought 5 million shares of this company, or she sold 5 million shares of this company, and that's what your people are following. I don't even know if that's like a current thing. I just don't have enough time to watch that. I actually want to put out a list of the stuff that I actually still watch, because I still think there's some pretty valuable things. Yeah, there's like some very valuable things out there, and I think what I'm doing will not be valuable to you guys at a certain point, because I'm doing the same thing over and over again, and watching me doing the same thing over and over again, it can't be helpful after a certain point. Like after you get your footing, you know what's going on. I mean, coming on live stream is pretty cool and pretty interesting, or just to like watch. Or I think Velocity, you said it before, like when I've had a down day, that's kind of helpful for you, because like, all right, I lost $30,000 today, makes you feel a little bit better about your losses too, just knowing we're all in the same boat. But as far as like learning how to do a put credit spread, like that is just not going to be useful like full time. So, but I watch a lot of interesting information about China. Like I think Patrick Boyle, who was a hedge fund manager, now he does it for himself. He has a lot of good insights. And then a couple things on Tesla that I watch. But I want to put together that list at some point, in case you guys are curious what I actually do. Do you do a lot of leaps? No. Wish I would do more. I actually sold this last week or two. I got out of most of my leaps. Well, I think all of my leaps that were not Tesla or Palantir. That's all I have left. So I got rid of like my Apple leaps, my Dropbox leaps, my DraftKings leaps. I got rid of all of them. And like I just want Palantir and Tesla. That's all I care about. It's all I really, really want to own. Yeah, I'm excited. Like Palantir, 20x. it'll. I think Palantir is going to be a bit of a sleeper. I know it's somewhat of a meme stock. It's difficult to understand. You actually have to put some time and effort into learning what they do, but I think it'll be worth it. So I'm excited. I'm excited for Palantir, and that's a long-term, kind of like Tesla. Like you look at Tesla over the last 5-6 years, man. Talk about like 3 years of stagnant. Like all these people that were probably in the same boat I'm at, like, yeah, this thing's gonna be awesome. This thing's gonna be awesome, and for years and years they don't even make $1 on it, and then now it's all paying off. I think the same thing is gonna happen with Palantir too, which I'll just keep buying it. Buy $22 worth of Palantir every single day. I think we have 500. What are we up to? Where's my Palantirs? 500 and some shares. Where is it? Palantir. 537 shares plus six or seven leaps now. mbike314 found your channel this week. Awesome. Hopefully I say something useful for you. Welcome. There was a video that had a billionaire's day in the life, and it had like millions of views, but the video explaining how he became a billionaire only had 20 views. Just an example was oh wait, okay, he probably does that to get more like views. It's probably popular to most people. They're more interested in how they can make 20x in their money than make a realistic amount with safer probability. Yeah, I mean, everybody wants a secret lotto ticket, but then it sucks because you have to lose money to find out that there's just no such thing. It's just death by 1,000 cuts, and then maybe once in a while you do actually hit something, and it's awesome. But by then, I think like as soon as you turned your $50 into 1,000, you've already lost 20 other lots of $50 to make it. It sucks. I wonder who the billionaire's day in the life. Is that something that Tech Conversations put out? I've noticed Guillermo's growth is extremely slow. I'm matching his weekly gains with a third of the capital. Yeah, I think I probably had less than him. I'm sure. Well, I'm sure I started with less. That is remarkable. Congrats. I started December 1st, 2021 with 500, but only have 50,000 now. Oh no, that's terrible. You only have 50,000. That's awesome. Let's see. How much did you lose during Tesla? Yeah. So, yep, lost I think 120 from top to bottom. Wait, oh, that's not my account. Dude, oh my god. H Mons, thank you. That's my first super chat ever. I thought I had to set something up. You're so welcome, man. That's the coolest thing. Let's see. So February 8th, 2021, 256,000, and then we dipped down to 120. So like $130,000 loss. So lost almost half the account, which is when we rolled everything out till now. So at that point, you could go back, which I wouldn't because it's silly amount of crazy, like just too many videos, too much crap to watch. But at that point, I'm just like, I'm rolling out to here. I had a few sad days. And I was like, well, it's going to be 9 months, but eventually that's going to come back. And that's kind of exactly what happened. Let's see. I'm sticking to put credit spread and occasional debit spread when they look good. Yep. And I think the debit spreads are just better when they're a little farther out. Like, that's mine. Okay. Oh, I missed much. Currently having the same revelation with put credit spreads. So many things. It's so many things in your favor. You're right. Like, we make money if the stock goes up. We make money if it goes sideways. We make money if it goes down a little bit. And if it goes down a lot, we still have recourse. Like, I don't know. I hope I see another better strategy or something, or somebody can teach me something out there. That was just the realization that I had, and I'm kind of glad other people are coming to that same conclusion. What do you think of PayPal? Do you think it will recover soon? I got to sign 100 shares at 278 from a cash secured put. I have not been following them, and unfortunately, I'm going to follow way less and less. Like, I need to focus. Like, all I'm going to have to do, which is part of simplifying this, is all I need to do is pay attention to the broader market and Tesla. And Tesla has such great premiums. That's all I'm going to have to do. I guess we could see, what did PayPal do? Excuse me. All right. I should have all 4 of my charts on PayPal, or no, I mean on Tesla. What is their? They are PYPL, PayPal. Was this bad earnings? I don't know, but it looks like it's hitting support, and you got assigned where? 278. I don't know. Now, if I was looking for another stock to play some put credit spreads on, it probably would be now. I mean, some support around 227, unless there's some major change, like fundamentally, that did this huge drop for us. This kind of looks like what I saw on Coinbase, which is the only reason that I played those put credits, like those put credit spreads on Coinbase, because it has such a strong support at the 220 levels. Antitrust. I don't know. I would have to go through the news. I don't even know what moved it. Hopefully you. I mean, I assume since you're selling it on it, you would know. Hello from Florida. Started this week with Iron Condor and Poor Man's Covered Call. Awesome. What stocks are you doing those on? I'm still holding my bag from DraftKings Leaps. Yeah, I had lost. I think I was down $1,000 on it, and I was just like, screw it, take the loss. Let's go do something else. If not Tesla, what other company would you do credit spreads on? if you had $5,000? None. I can't meet. I would love for somebody to sell me on another company to do it on. Um, I mean, I would do so if I had to do another company, I would do cash secured puts on Palantir because it's been pretty volatile. But uh, there's not another one that meets such a great criteria for me, and I'm so interested in the stock itself that I don't mind keeping up with it. So, for example, like we're going to have a pullback at some point. It's not going to go straight up. And when that pullback occurs, because I pay enough attention to it, I'm going to know why that was. Like, is it because overall market's down? Did they come out with bad news? Is it just like blowing off steam? So by being able to just pay attention to that and determine what the pullback was from, that's going to give me the comfort for whatever move I need to make next. So like if it's a stupid NHTSA thing or something like that, and it pulls back, I'm just gonna like double down on more covered calls. If it's like broader market and people are needing to sell off, then that's not as comforting. So it all just depends like why that's happening, and I don't need to do anything else. You did it. Let's see. Who is Guillermo? Oh, he's the guy at Tech Conversations. That's his YouTube channel, and he does like from what I've seen, just a bunch of like plays. Like here's a butterfly, long call butterfly, reverse iron condor, like basically. How do you think about balancing your credit spread ratio across strikes and expiration dates? How do I think about it? I mean, if you like watch the videos when I do it, I don't think a lot about it. So sometimes it's finding a good spot where I'm basically collecting the premium I want to, which like 20%, or not 20%, like 10%, somewhere in there, 10 to 20%. And also it's based on price action. So like it's totally counterintuitive. But if we have a big drop, and it's for news that I interpret as, man, Mark, thank you, dude. Man, awesome. Two of these in one day. Awesome. This is that. Yeah, love you guys. You're super welcome. Thank you guys. Thank you guys for all the comments, support, love, like everything. This is what I wanted to do. This is actually what I wanted to do with my friends and my family. Like, because I was getting into it, I saw the potential. This is exactly what I wanted to do with them. Everybody's like, that stuff's boring. Now they're like, hey, how you doing on that thing? Super awesome. God, where was I? Can I rewind the video? Oh, so like if we do have that big drop though, we can and we know the news is pretty much temporary, then I'll get closer, like I will get a closer date and sell closer to the money. Where like now, so like now we've experienced something completely new, right? We've gone up like 20% in the last few days. Thank goodness there's still premium down at like 800, 900, 1,000. So now I'm giving myself a little bit more time. So I want 4 weeks, and I'm getting more comfortable with like the $1,000 level, like just under 1,000. The majority of them are 900s. But it's really all based on, it's 100% just based on price action and news. Like there's no technical analysis that I do, other than like I'll see a wedge and expect another leg up, which I mean, what we've seen that I don't know how many times. God, all these levels are like so far down there, but just looking at some of these wedges forming and then expecting another leg up. I mean, it happened here. I don't know if we can see this, if it's too small, but there was like a wedge here, leg up, wedge here, leg up, and that's all that I do. So no secret sauce, no nothing. Let's see, dude. Um, a very similar. Okay, and what you were doing was conviction. Thank you. Let's see. Yeah, total conviction in it. And also like owning a Tesla has been a huge part of that, like actually experiencing what it is. And in Seattle, I live in Seattle, so I see a million of them. I see tons of them. Like I can pull up to a light, and there's like four other ones at the same light. So it's not like Nikola where they're like, oh, we're gonna make this thing, and it never happens. What percentage of your portfolio do you put credit spreads? I have a $24,000 account. I do the wheel strategy. Put 3% of my portfolio into put credit spreads. Probably over 100% because I use collateral to do it. No, maybe half. Actually, yeah, about half of it, but the majority of it. Oh, and since yeah, definitely we have a few new people here. This is not my only portfolio. It's not my only brokerage. I have money in M1, which is like a basket of stupid, like I get not stupid companies, but just you know, I don't know, dividend paying things. I've got 3M and Johnson and stuff that's just like probably rusting over there, literally making me like $5 a year and stuff like that. So I do have that. I have a Tastyworks account, which I generally trade the same thing. And that portfolio is 100% put credit spreads on Tesla and has been since I started that one last June because I experienced such high growth and and I was like, this is unreal. This is unreal. Like turning $500 into at that time probably 90,000. I was like, can I do this again? And so I started over with a Tastyworks account with I think I started $600. That way I had enough for one put a credit spread, and that way I had a little bit of cash in case I needed to roll it out. But I think so I did that, and then I mean that took I think 6 months or something to 10x or something like that. So I still have that one, still growing that one, and then I have a TD Ameritrade account. So, but as far as like the public one that I share, the Robinhood, half of it probably. Jeez, guys, oh, holy crap! I didn't even man super chats. Dude, you're welcome. Oh man, Kojo, you're awesome. Roz, thank you guys, man. And it's all you guys that like give me the energy to do this. That's so awesome. It's so I don't know. It's crazy. All my first like first time getting these. This is super cool. Thank you guys. I hope you guys all had such an awesome week too. I guess you really just don't need to charge for a course, right? You guys make money, and yeah, if you appreciate it, that's cool. Let's see. I don't miss anything here. All right, he was talking. Oh, okay, yeah, you got the Guillermo thing. Too much entertainment for a Saturday for me. Watching the stream and UFC card has been fire. Yeah, man, I haven't watched UFC for a while. That's like I'm not a sports guy like at all, but I love watching UFC and I love watching hockey live. And I know so little about hockey. I went with actually my ex girlfriend a long time ago. I had no idea, and we literally sat and waited for the third quarter. So I'm sure all you guys know, but there's only like three periods in it. But literally everybody's like walking up, and we're like, "Is it last call for alcohol or something? Like, what's going on here?" PayPal was going to buy Pinterest and it dropped. Oh, okay. Yeah, I did hear about that news. It's kind of funny that it went down. Usually when they're spending a bunch of money, that's then it drops. I was doing some cash secured puts and covered calls. Those are the only strategies I'm a little familiar with. I've been learning from zero. I didn't even know what bulls and bears were. I know, right? Yeah. I would get those, like, I didn't know which one was which. I was like, why is this? And I was curious about, I don't know, a few months ago I made like a little short on it, but because I couldn't keep it straight. So bulls, and this is I guess what happens, because bulls, like with their whatever they are, their horns, they like attack by going up. So that's why when the stock market goes up, it's a bull, and a bear attacks by swiping down. So when it's down, it's bearish. In case you were wondering, I thought that was interesting. I was also trying to figure out, like, um, I was looking into why shorting, like why do we call it shorting the market? And apparently that goes way back to these sticks people would make, and that's how they would record transactions. So they would take a stick and do little notches in them, cut them down the middle, so that way these two sticks opened up, and the short end of the stick was the person who had to buy it, and that's where that came from. But that was pretty interesting. There's not a lot of information on that, but I'm always curious, like some of those weird things that we say that I don't know, we just don't know where they came from, just in our vocabulary now. What's everybody's thought on Bitcoin? I don't know how much I should be investing in it. I'm investing $3 a day in Bitcoin, outside of what I mine. So I've been holding it since like the last, like when it hit 20,000 and dropped down to 5 or 4 or whatever it did. I mean, there's no intrinsic value, but people are jumping on board. So I don't think it's a bad idea to have some of your money in it, but it's hard to say. It's super hard to say. I'm liking SoFi for the long term, for growth as well, but for shares and leaps and puts more than credit spreads. Yeah, like super long term stuff, that just makes more sense. I mean, that's pretty much like shares and leaps. I mean, the same thing what I'm doing with Palantir, right? Where do we go? Um, SEC hating on Elon most likely. Did you see Elon's tweet? He's gonna start the new university, the Texas Institute for Technology and Science. Like literally tits. It's best. That reminded me because you said the SEC when he tweeted that. SEC stands for suck Elon's and dot dot dot, I think. Just got shot down on obtaining a bank charter. I don't know what is. Oh, I see. They just got shut down. Okay. Usually buy 5% in the money. What about at the money? For the put credit spreads, yeah, I'll do them at the money. I'll definitely, like with time on them, I'll do some out of the money when they're. Um, if we're talking about selling put credit spreads, but like when I bought the leaps, those were out of the money. I bought that when Tesla was at 600. I bought my 850s, so out of the money. And honestly, other than using the same strategy as far as like deltas and everything else, I don't have a usually. Have you ever had a huge loss with put credit spreads? Did you close or roll out? I rolled out. So I had 35 $10 wide, so $35,000 worth of collateral when Tesla came down. I mean, it was the beginning of the year, right? When this happened this year, and I rolled them out till December, like December and January. So that was my big drop from like 250 down to 120. I rolled those out till the end of the year, $35,000 worth of collateral instead of closing them out and taking a loss. I collected premium when I rolled them out, so then I was able to kind of, like, when it was down, I was able to kind of start over with that money that I was able to collect as far as premiums, and then keep going up. So now that's basically what happened this last week. Like I ran into all the put credit spreads that I rolled out, plus this kind of snowball of ones that I've been rolling out for a long time. Like all those things just hit, like all hit at the same time, plus this gamma squeeze earnings and this rocket ship. Damn dono. Yeah. So that was, I mean, but I generally won't close them out just because even if I open them up right now at the money, $1,100, like there's no question in my mind that Tesla will get there at all. So uh, even if this whole run up, like this whole thing, is complete fluff, and wait, oh, wrong button, wrong drawing tool. So even if come on, so let's say that completely sells back off, I don't really care. And we can pull back in the account $30,000, $40,000. I know, like this trajectory, like at a minimum, is what's going to happen. So if I have to wait 6 months, 9 months, a year to collect things that I've opened up now, that's completely fine. I'm not trading or investing for next week. I don't need the money next week. If I did, I shouldn't put it up as collateral. So even if I had to roll those out 6 months or a year, and I wait till the end of 2022 to collect it, and I don't lose any of my premium, that's what I'll do. That's what I did during this drop. I'll just keep doing the same thing. Put credit spreads plus some more speculative call debit spreads on Tesla. I doubled my account in the last 2 weeks. Awesome. That's super awesome. I saw some guys posted on Twitter, that he had a bunch of $1,000 calls, and like just last couple weeks, like sold them, paid off his mortgage, and like he's done. He's just done. And the crazy thing is, he started buying them in January. Like basically at the high, he was buying $1,000 calls for the end of the year, and then just kept averaging them in. And his first one, he said, was like $25,000, and then he just kept averaging down. But that's super awesome. I love the combination of those two things. It's exactly what I have in my account. Call debit spreads. I think are, man, they can be such a good deal. And put credit spreads. How should I invest with 2,000 in Robinhood Tesla put credit spreads? I can't tell you how you should. That's what I would do. It doesn't really matter the size of the account to me at all. Um, that's pretty much what I've been doing. And if you're just getting into it and you're learning, put credit spreads are very easy to learn. They're very simple. They're very easy to manage, and you have a lot of different ways to win on them, which is why I like them. And that's what. Oh, and um, yeah, I'll be doing my IRA account with Tastyworks here. Hopefully we can get started with that next week. Actually, this is like a little bit of a little rough week with Tesla being like super up, but I want to get started with that, and I'm going to start all over. I'm going to do an account with $6,000, and I will do all my trades in blocks of 10. So whether you have 6,000 or 600, you can follow the plays essentially. And I'm going to do it in my IRA, so I'm going to be safe with it. Like I can only put $6,000 in there, so I'm not gonna be doing anything crazy at all. So, but I'll let everybody know for sure when I get that started. So hopefully that's a week or something. I bought my Leafs when it was 14. Okay, must be something else. What do you think of January 2022 Starbucks call debit spreads at 90.95? I think I swear I had like Starbucks $100 Leaps at one time. SBUX, so there. Oh, did they have a big? I was actually wondering how these guys are doing. So they must have. Wait, was it earnings? Is that what we had? Yeah. So big miss on earnings. Oh no, not even a big miss. 0.00. No, they beat on earnings. Probably just lower guidance then. Supply chain issues. Okay, so January 22. I like it. Are they? How much are they? I mean, that's probably good. What software am I using? This is Thinkorswim. So this is what I use with my TD Ameritrade account. Even though like when I'm actually trading, I almost don't use this. I use this for the charts pretty much. But almost what's insane, 2020. It's insane that $300,000 I made on my phone. Stupid. It was China FUD. They lost clients in China due to COVID. Oh, dude, China's crazy. China. Oh my gosh, that's the ones I want to share too. I watch a lot of information about China. Like, I think they are poised for major, major downhill. Like 2008. What we went through economically. I think that's gonna happen, and I think it's gonna blow up big. I think like Evergrande, it got some attention, but I don't think that's not the big thing that's going to happen. I think it's going to be a lot worse than that. Way worse. I can't believe. So, based on China's their consumption, essentially, it dropped what almost like 15. Oh, I guess 10% drop. Yeah, it's not too bad. I was watching something this morning. What's their average income? I want to say is only like 13 or 15 thousand dollars a year or something like that. It's crazy. China is very, very scary, especially like the facade they stick out, which I really want to wrap my mind around. You actually just entered some put credit spreads on Starbucks yesterday. Would love to hear some insight on the stock as well. I don't have any insight because I just don't follow it anymore. Uh, but I mean, it's like one of those. It's one of those things like where that huge drop. I don't care whether or not there's lower demand in China. Starbucks is they're on every dang corner. I was like going into a grocery store to go grab a coffee the other day, and I was like, man, this is like literally everywhere, and literally you could not, you couldn't possibly not know what a Starbucks is. It's just not possible, and it's just a go-to thing. Margins have got to be great. It's coffee, for goodness sake. So, I mean, it's probably a super awesome long-term holding. I don't know. The only thing, if if there's some like health concerns over it, where people just kind of stop eating it, where I know a lot of fast food chains went that way, where people just wanted to eat more healthy. Once they realize they're literally like drinking a cup of sugar, like my girlfriend gets the frappuccinos and stuff. Maybe that's it. Or we realize, hey, we're all too damn fat and we need to stop eating Starbucks. And that's the way I start my day, with like 800 calories in a frappuccino, or I don't know what they are, $1,000, like I don't know, they're or 1,000 calories. I don't know what they are. I drink like all week. My coffee's black. That's just what I do. And then during the weekend, I put condensed milk. So that's it. Um, Evergrande crisis is far from being over. 100%. Were they build out? Yeah. So they missed bond payments, and yes, they were billed out, but like for one payment, it's like if you missed a payment on your credit card, or were about to, and the whole world is watching, and then just because you made one more payment, that's, I mean, that is super far from over. How about the next payment? And I think they paid off their foreign bonds. I think maybe U.S. and it's kind of like a save the face thing. But they're Like the amount of money that they're dealing with relative to China's GDP is insane. And I think each of the bond payments, if I remember correctly, was like quarter a quarter of what the CCP takes in annually. So they can only do so much. They push back the payments too? Okay. So they're just like getting more time on it. And they have nothing to do. Nobody, like, it's like what, 20% or something of their housing, at least 20% of their housing is vacant. Most of their housing is garbage. Like, I'll put out a group of videos on this. Most of it, like, it's cardboard and styrofoam and painted over cardboard and styrofoam and all this kind of stuff. Like, they're actually like trash. So now they have no assets to sell off. And, compare that to our 2008, when we had houses and they got foreclosed on. And so like, okay, so like I bought, for example, a $500,000 house, economy sucked, and now the bank forecloses on it and they have this asset and they're only able to sell it like down the road for 400,000. So they lost 100,000, like maybe they lost 20% of the value on it, but we're still able to recover a portion of it. And now trying to, like, what are they going to sell this cardboard garbage that it's like moldy, mildewy, falling apart? They have nothing. That's the difference. That's their asset now, is something that's going to turn into nothing. I'm sure there's some of them that were okay, but yeah, they're losing 100% value on a lot of it. And who's going to be the new buyers? The whole thought process between people, or behind people overbuying the houses, is that was one of the only ways where you could actually accumulate wealth. And China was buying this property and, sit back, let it appreciate, and sell it. And, it's like buying begots buying. Kind of like what happens with the gamma squeeze on Tesla. Like, people buy it, they see it's going up, they buy it. But those assets were actually worth nothing, and that's what happened. Like a big balloon pop. Yeah, that's gonna hurt big, and that's where a lot of people's, like, their entire savings went into this. So I think it's gonna be huge crushing, and Evergrande's just like the tip of the iceberg. And they can't even keep the power on over there right now. It's bad stuff. Thoughts on Neo? I have the one put I have is on Neo, so that's my basic thoughts on Neo. I mean, most auto manufacturers fell. Chinese economy is not great. If you're going to buy, at least in the U.S., if you're going to buy an EV, what's it going to be? It's probably not going to be the Neo. I trust their accounting as much as I trust, like, Luckin Coffees. They put out and China is known for putting out like shill videos. So you can actually go find some videos where people are reviewing it in China, and oh my gosh, it's so great. And if you don't think they were compensated, yeah, think twice about that. So could they do well? Could it become something? Maybe, but nothing I would bet on. China, like, there's not even a Chinese brand that you would think is good, right? Like, think about anything from like leather goods to watches to like anything prominent, anything that you actually want to own. Oh, maybe actual, like, China. Maybe that's about it. But I think most of China's like made in England or something anyways, or somewhere else. But like, Japanese have nice, like, they're known for nice watches just everywhere around there, but I don't see them blowing up. So short-term plays and whatever, just not a long-term holding. I mean, same thing with Lucid. Lucid, I think, great stock to play, and obviously their stock price has been killing it. But LCID does. So congratulations to anybody that held that. But their management is super top heavy. They have a they're very tight. They're very very top heavy right now. Where on a startup you really need to be like lean and mean. Um, so I think it's been a long time since I looked at it, right? So I looked at it. I think I'm sure I bought stock in it at some point. And then I did my due diligence and saw what they needed to achieve. So it's like if they do everything right, like 100%, they're still not going to make a dollar for like several years. I think it was, and I want to say like 2028. I could be totally off on that, but I know it was at least several years if everything goes right for them. And like their main car, they're competing against like, I mean, Tesla Model S some, but like the Tesla Model S isn't luxury like a Lexus or Mercedes Benz is, and then so that makes them competing with a Mercedes Benz. I can't remember. I don't think the price difference is too much. And if you were somebody that's wanting to spend that kind of money, you probably want the prestigious name. I would think you would get the Benz instead of the Lucid. That's what I think. And their market size can't be that big. Like I don't know how many people are even in the market for a $100,000 car, let alone $200,000 car. It's insane. And then when you can just go get it like a Plaid S, that's crazy fast and kind of a norm. I think they're gonna have a tough time, honestly. And I hope they do well. I hope they do hopefully they're successful and they're like a newer American car company because it's tough. It's tough. I mean, Tesla barely made it, so, but now they have. How far do you open a new put credit spread, and what percentage would you take profit and roll them out for a new premium on Tesla stock? So a new one, I would open, 3 to 6 weeks out, 4 to 6 weeks out, something like that. And this is just as a rule of thumb. I do them all over the place and it depends on price action. So 4 to 6 weeks out, 10% premium is usually really good. And then I would wait till I would look at managing it about 3 weeks before expiration. If the stock price is doing something that you don't like, if everything is looking smooth, then I typically roll it out the week before expiration. So like if I had something expiring the Friday after this next one, this Friday, I would roll it out. Evergrande is correct. Let's see. They have a long way to go. Oh boy. Okay. There's so much good like inside information, but the channels usually are not very big. Actually, Patrick Boyle has some stuff on it. There's I need to find this. I need to find this channel, and I'll post it. The one that's very interesting to me is there's these couple guys, and they're actually a pretty big channel. But it's a guy from South Africa and the U.S. and they basically rode the motorcycles through China, and they kind of show you things very, very firsthand, and it's very real, which is kind of plays into the whole thing. I know I probably watched one of them this morning. Let me see. Da-da-da. There it is. There's one of them. Let me see. How do I share this one? This is like one of the two guys. Where's my share button? Oh well, I'll just post this. But this is an interesting place to get started. This, and then like from there, I think he does videos with another guy, but it's very firsthand. And the where's the, if you can find the video he did on housing, it might be pretty interesting. But everybody only has a limited amount of time, so you can either watch a whole bunch of videos or just or believe me, it's pretty scary. Which is why I'm not. That's why I could not get back into buying Alibaba or anything. It's just no, 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 no. When do they owe money again? Yeah, I'm not sure either. But there's many more companies like them. Basically, what happened is the CCP put different things into effect, like they weren't allowed to be leveraged. Um, and I can't remember like there was three rules that went into effect. And Patrick Boyle again, if you check that out, he goes through that. And so that Evergrande's just the big one, but those rules went into effect for several contractors like that. And um, you're probably, yeah, you'll probably be able to find that same effect that happened to Evergrande. It's going to be across the board. And then all these people, these huge companies that were, how many people were they employing that don't have anything to do anymore? Like, damn. And at one point, I remember going, oh man, if Alibaba goes down below 200, thank goodness I started doing some research on it. I'm just going to buy all these leaps. Oh, I would have been screwed. What's up, Eric? Yeah, and I think part of them not paying attention to any, like, they don't want that out there. They're very they're very like face oriented, which is odd. It's just, well, I guess it's not that odd because we see people doing it all the time, right? They don't have any money, but they'll spend it on a shirt with a giant logo that says "I have money," or a hat, or whatever, stuff that makes people look like money or looks like they have money. And kind of China's the same way. Yeah, I mean, obviously Tesla is a Chinese exposure, but I mean, as long as they can produce there and export them, we'll be okay. That's actually one of my scary things there. But their actual deliveries and stuff in China have not been bad. I think we get some new numbers from that here, and I've heard they're supposed to be pretty good. And I can't remember the other. There was like another second company that was a pretty big one too. All right. What's the question on debit spreads? Oh, happy Halloween tomorrow. You guys, anybody dancing or anybody dressing up? Doing anything? I completely forgot about it. We're going out with a couple friends. We're going to go see if we can like scrape up a costume or two. I was going to ask if it's okay to let a debit spreads expire. No. I mean, if they're like out of the money and they're not worth anything. No, 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 no. Nope. Nope. Don't let debit spread. Nope. Only credit spreads if they're expiring worthless. Um, no, they will not be. No, they will not be. And you trade in Robinhood though, if I remember correctly. So Robinhood will automatically sell them for you. But I mean, I wouldn't trust that 100%, but I think it's like 30 minutes, or not 30 minutes, maybe an hour before closing. It says as part of the closing out process, we are going to close this position for you. But no, yeah, you cannot let those expire unless they're like worthless. So if you gotten out of the money one and they're not worth anything, then you don't get. And no, there's no, and because it's a debit, there's no money to be returned. It's only with a credit where you have collateral out there and that collateral can be returned as long as it doesn't cost more or it doesn't cost that collateral to close it. So we actually have a few of those. There's a Robinhood portfolio. I actually have some debit spreads. Oh, maybe I'll make myself smaller now so we can actually see something. Credit spreads. There we go. Debit spreads. So like these at any time we can take profit. What did we pay for these? We paid $127. Now they're worth 700 and some. And then like the date of expiration, these would probably close out automatically, but they're not holding anything. This is just has value. Um, so you do need to close that out. So I could collect 700. I could collect 700. So totally. How do you pick credit spreads based on the direction of this, or do you pick put credit spreads based on the direction of the stock? Example: SPY is up now. Will it be best to wait for it to dip before doing a put credit spread? Yes, ideally, it totally 100% would. But it's almost like if something's kind of barcoding and you expect it and you have an expectation of a dip, yes, that would make sense. The overall big problem is just we can't time the market. Like, holy crap, I expected a pullback on Tesla after earnings. We all did. Like that's what's happened to every earnings. They have good earnings, they pull back. Expected that. Bumped up against 1,000. Okay, it's hit 1,000. Expect a pullback. Didn't happen. 1,100. Expected a pullback. Like, it just doesn't always necessarily happen. So let's see. Yeah, so it would be ideal because you're going to be able to grab more premium, but yeah, you just can't. You just can't time it. I guess if we were sitting in, yeah, and then like as soon as you expect a pullback, like you start to see the pattern where we're sitting in like a range, which we did. We sat at a range for so long, and at that point it was like we could, but then like, just nobody expected this rocket ship. Let's see. Your year over year though, yeah, I'm happy with it. Rolling is a savior, 100%. Especially on, man, on put credit spreads. God, just that's just why I can't get another strategy in my head. That's is good. What happens if one day Robinhood shuts down and all your money is on one platform? All my money is not on one platform. It's in Robinhood. It is in TD Ameritrade. It's on Tastyworks. It's on M1 Finance. That is not all my money. So, I mean, maybe it would be prudent to take some out, so at least they're insured over. But yeah. And if they collapse or something and all that money disappears, we're probably super screwed, or just like all across the board, anyways. But it's definitely broken up, and especially like when they have those down days too. I don't know if you guys were using it at the beginning of like the pandemic stuff, but Robinhood, remember, like access, we couldn't trade for like a day or 2 days or something like that, and I was upset about it. Need to have backup platforms. And I like initially opened up. I can't remember why I got TD, but I had that, like, it's like you want to be able to see some charts and have some great news, and I got Tastyworks because I wanted to see the Greeks plotted out, so just for the visual, and I like them too. But man, Robinhood, as far as like mobile trading, nothing better. Like nothing quicker. It's actually slowed down since it's kind of like a little quirky now with everything. I don't know, when I go to select one as far as the mobile platform, you guys probably see that, and then it like resets back to the current price, which is frustrating. But I can't make those same trades as quick or see it on my mobile, like my TD Ameritrade. Tastyworks is just buggy as all hell. So that's why I like trading in it. And on my other two, my TD and my Tasty, which I actively trade in, I do things like like I'll just make like one trade a week. I'll make it heavy and safe, so I don't really have to manage it. And once in a while I forget about them and I get a text message saying, by the way, you have options expiring today. I actually forgot about that. I have like all my Tastywork stuff. I was looking at it like Friday. I was like, oh my God, like what have I been doing? They're all down in the 700s. I mean, it's good. Yes. Okay, yeah. I do put credit spreads when they drop on good companies if they had bad earnings or something. That's smart. It would have been fantastic to grab some on Apple Friday, right? My God. I've done months of wheeling, poor man's covered call, etc. Put credit spreads just make the most sense to me. Yeah, I like, yes. The more I do it, the less I like the other strategies, is what I figured out. Wheeling, like you have to want to own it and you have to not want to own it. And it's like guaranteed as soon as you sell, like at some point, once you sell that call, it'll go rocketing up and then you collected $20 premium on the stock that if you hadn't have sold the covered call, you would have made 10 times worth of money. It's just frustrating. And no, like that same amount of collateral that you have in the stock, I'd rather just do put credit spreads on it. Or if I really, really, really wanted to own it, just sell the cash covered puts until I do own it. Easiest oh, I like Robinhood. Easiest platform for me. I definitely want to learn Tasty, but Robinhood for now. Yeah, I mean Tasty's good, but it's not. There's just not as intuitive. None of them are as intuitive as Robinhood. Tastywork is just supposed to come out like redo their app. It's definitely getting better, and it's way less like. It used to just screw up so bad. Like I opened up positions totally accidentally, had to call the trading floor on them. I'm like, I need to undo this. It's better, but still not. I mean, Robinhood's just so damn clean. Put credit spread is basically a low effort side hustle. 100%. It is. It's almost passive. Semi-passive. I mean, I guess passive needs to be passive, but yeah. I feel like the hate for Robinhood is overdone. I personally love the app. Yeah. It's like, why don't you like oh, you're not a real trader. You use Robinhood. Heard that. But whatever. What games do you play on spare time after trading? Oh, you can probably see it like League of Legends. That's it. It's the only game I play. And yeah, League of Legends and read and probably watch stuff. That's about it. I like it. But I have no mechanics or anything, like which kind of makes it suck, but it's still fun. Easily one of the best apps for mobile. Yeah. It's has to be. I think some people have been using TradingView, which I've seen a lot. Looks pretty okay, but there's no reason for me. I don't need to switch. I mean, the no commission thing, like whatever, it's good. Would you hold a leap for a whole year or close it if you're up in a certain percentage? Depends what it's on. So like the ones that I have on Tesla, I just keep it. And also depends like why I bought it. So the leaps that I have on Tesla, I'll just hold. And wherever, like if Tesla stock in 2023 is at, I don't know, 2023, $2,600 a share, I'll exercise and pay $850 a share. Like that is super dope right now. Like literally, I mean, we can exercise that and pay $850 a share on a $1,100 stock. But Palantir, like 100%, I'm gonna exercise that. I'll wait till expiration, exercise it, and pay $20 a share on that. How do you manage if you had to roll far out? I would I would roll to right before the next earnings is what I would do. If it's like more severe than that, I would go 2 earnings out. But that's what I would target. Like every single earnings has a you have the catalyst of the production delivery numbers prior to it. You have an earnings run up on almost every name, and pretty big on Tesla. Um, so I think that's a good point. And then even if it happened to drop after the earnings, you wouldn't care if that's the point that you rolled it out to try to get some money back. And then along the way, it's going to be should be like next year is going to be pretty big because not only do we just have increased production and deliveries, we have Texas, Berlin, and then towards the end of the year is where we should start seeing like Cybertruck. And even though we all know it's coming, like everybody knows these things are coming, as soon as it's announced and we get first deliveries from there, it's going to be a bump up. It blows my mind. Like we all know this stuff, or I guess maybe not all, but especially like institutional investors, like they know this stuff is coming up. If they're an analyst, they know. But it'll inevitably spike the price when Cybertruck deliveries are going to be scheduled for 3 months from now. If I had to leave for a year and bought it at 70 Delta, I'd personally roll it out another year. Interesting. Yeah, I've seen like so many different things you can do it. Just watch Game of Thrones. One of the best shows. I watched like a season or two. I've seen next to Breaking Bad. Oh, Breaking Bad. I just rewatched that whole series. Breaking Bad. My girlfriend had never watched it. I'm looking at putting a certain amount of profits from credit spreads into Tesla and Palantir. Would you say it's better to buy stock or leaps on Palantir due to leaps being more affordable? I don't know. Like, I don't know what it's going to take for it to get above 22. I mean, like, at the end of the day, stock is just safe. And so if I had to pick one, I would just say the stock. Because in my mind, like, it will be going like 10x, 5x, who cares, or whatever. Like, that's going to happen. But we just don't know when that is since we can't time it. So getting that no expiration on the stock, I think that would be it. And I love owning the equity. It's awesome. And then it just doesn't hurt as much when it drops, as long as you actually like it. As long as you love it, doesn't matter. Cybertruck is so sick. Yeah, my initial reaction was, okay, where's the real one? Like, after he brought it out, then it's grown on me. And then it won't even matter. Like, even if it still hasn't grown on somebody, you're going to see him everywhere. It's just going to be a thing. You remind me of an older, wiser Mitch Ray. I have no idea who Mitch Ray is. Look-alike and same mannerisms? Maybe he's my long-lost cousin. Mitch Ray. I want to see who it is. Mitch Ray. Mitch Ray YouTube. Technical analysis. Wait, where is he? ROBINHOOD? Oh my god. Is it the technical analysis with Mitch Ray? He's got the coolest ever thumbnails. I'll have to watch one of them. Oh, and basically just streams and streams. That's cool. Yeah, I'll check it out sometime. That'll be interesting. Never heard of him. Yeah, I watched very little of it. Well, especially like trading stuff now too. I don't want any of it to cloud my judgment. Partially too. Like I was just watching. What was it? Oh no, it was like in Discord where somebody was like, there was like a huge put sweep after, like right after Tesla earnings, like 620s. And I'm just like, what are they thinking? Like what? But what do they know that I don't know? So it drives me like a little nuts, and I just wish that was never in my head. I would have been more bold. I would have made more if I never would have saw that. But also trying to be at the same time open to what other people are saying. Um, but if there's no reasoning behind it, I just can't blindly believe it. Can you explain how a call debit spread works with a Robinhood example? Yeah, you bet. Easy peasy. It. I mean, it's just like opposite of a debit spread. Kind of funny enough. Oh, I should turn that off, shouldn't I? It's funny. Like I use my graphics card because this is not very intense to mine on my on this computer. Like when I'm not rendering a video or something like that. But we've making a $1.83, making $1.83 a day on this one graphics card. Let's see. Okay, so how it works? I can't believe with as many put credit spreads as you do. That's crazy. So it is super the exact like same thing as a put debit spread in a kind of weird way. So I don't know. I don't know when we want to go out or how far we want to go out. Let's say March. So we're getting ready for the next earnings or something like that. And wherever you want to pick your strike. So I mean, you can the call debit spreads. There's I think more use for them. Like if you're doing them when they're in the money, you might as well just use a put credit spread because then they're manageable. But when they're out of the money, it's going to take pretty little collateral. So I think this coming year we're going to be, I think we'll be in the $1,200 to $1,500 range. But for example, let's say I want to take advantage of that, and we think it's going to hit somewhere, be above 15 by March, which is a little crazy, but who knows? But pretty simple here. Let's see. Make sure is that out of the way? Oh, that is out of the way. So pretty straightforward here. And when I say like opposite of a put credit spread, basically our max loss on these are just going to be what we paid for it, as opposed to putting a bunch of collateral up and collecting money up front. So our max loss on this, in this case, $790. That's what we pay for it. The price does need to be above $14.50 at expiration in order to be profitable. And then if we're at $1,500 or above, we collect 100% of this. So max gain on this is going to be the spread. So it's $5,000, a $50 difference in the strikes here. So $5,000 minus what we paid for it, $790. So $4,210 is our max gain. Oh, I guess it says it right here. And that's what it looks like. The other thing I would look at, option strat, which I like quite a bit. I don't know if you use this, but let's see. Let's do a bull call spread. And same thing, we can do Tesla. And I always like this because it shows you what it looks like over time. And we were out March. And we were way out of the money. I think we were, 1,500. And we need to show more chart range here. But basically that over time is going to be what it looks like. And max risk 700. So you're risking $700 to make, or 790, but I guess about $800 to potentially make 4,000 if we go up there. So pretty straightforward. And then you can see just like what your ride along the way looks like as it moves up. So you can see if it moved up quickly, like if we hit $1,500 next week, definitely not going to happen. You'd be up 13, but you do need to wait until we're closer to expiration to be able to collect on the majority of it. With my will money, I do put credit spreads. I just reinvest. Nice. On my will, I just reinvest in the underlying for most of the things that I want to hold to. Also kind of helps me keep track of them without actually doing like a spreadsheet on them or anything like that. Do you have any plans in case another black swan event would happen that tanks the market, for example, like buying a long-term put? No. And I saw some huge, like some back testing on protective puts, and what it was found as is protective puts are just bad. Like I think the title of the video is like, what's the best way to buy a protective put? And the answer is the best is just not to, because in the long run there's no way of timing any of it. They're just not good. So no, I do not. And I'm fine with a decent pullback. Like I don't know. I mean, obviously there's just more between zero and where we're at. But I still look at this. Huge dip. I mean, this was like, if you really put your mindset back to where where we were at that point. I don't know about you guys, but my mindset was like completely unknown. Is the world going to be destroyed? Are we losing half the people? Are we losing half the people we know? Are half of us going to die? Are a third of us going to die? Like, it was so unknown at that point. And that was it. And then we recovered, like, in such short period of time. I think recoveries are always going to happen faster and faster, just because the information that we have is faster and faster now compared to, now you can get like Twitter and Facebook and YouTube streams, and the information is just so dang quick. So I think stuff just recovers quick. So black swan event happens, it's probably going to buy more Tesla. and I happen to be, my day job, which I still have at this point, like, that industry is still good in downtimes. It's actually really good in downtimes. So that's always been a really fortunate thing for me over the years. So super good. Or then I'll actually just come in here, like, I'll just sell a course. How to profit during the black swan event. If I'm really desperate. Nah. Thanks for all the great videos. Learned a lot from your channel. You're very welcome. I think they're super crappy videos because they're unedited, but I'm glad you enjoy them and can get anything out of them. That's super awesome. Do you sell covered calls on Tesla, or you find put credit spreads are more profitable? Covered calls are scary. Like think about, I have done it. Will I do it? Nope. Won't do it. And again, see, like, when we were at 860, like, think about this. When we were over there, how likely do you think, like, I should have been able to sell an $1,100 call. And so if I was to sell that, I probably would have picked up $20, maybe $100 at the max for a couple weeks out. But I mean, who would have known? And that's where I think you just screw yourself, and it's not worth. My worst fear is getting my shares called away from me, and then not be able to purchase them back. Like, when we were in the, it's just not a sideways thing. And this is what I'll always say. Like, on those, we never know when the tweet, boom, this is announced, and the stock is going to go rocketing up. Again, I never expected this, and never expected it to be Hertz, that huge catalyst. But so no. My short answer is no, never ever going to do it again. I'm not going to sell call credit spreads or anything on Tesla. Just no need to. You almost figured you should have been able to do it last week, right? When we were just at 1,000, should have been able to sell $1,100 call credit spreads. And I am so much more scared to the upside, because the upside, I know I can potentially never have a recovery. I could potentially never be able to roll it out, and the stock comes down. Where the put credit spreads, I know I can roll those out, and I have ultra high conviction somewhere in the future the stock price will be higher than it is now. And right now we're giving ourselves, like, at least $100 worth of runway. So it's got to pull back major. So no. Stone, you're welcome. Can you explain what Robinhood does with the bid ask with the bid ask spreads? When I hear people criticize Robinhood, I always hear this brought up. Thank you for taking the time for all the questions. You're welcome. So people complain that it's not like your fills aren't as good. So oh, the bid ask is going to be put out there by a market maker. Somebody, your transaction isn't going, like, let's say you buy a put and I'm selling a put. You and I are not matched up right there. Like, you don't own that right away. There's an intermediary, which is a market maker, and that market maker is going to control the spread on things. So that's where they make their money. But they have agreed to take on whatever risk that I want to take. Like, if I want to take on risk or I want to purchase this, they're taking on that risk on the other side of it. And then at the end of the day, dark pools, that's what matches all these big orders up at the end of the day. That's why you'll see, I don't think we'll necessarily see anything here in the short term, but sometimes you'll see a candle with just like a crazy wick on it, and that's everything just matched up. Like, we had some buy and sell agreements, like, even though Tesla's at 1128, maybe they were at 1030. So you'll see, actually is that one right there? Let me see. So like right here, where we see this crazy wick down here. This is, and you'll see these in the after hours. So it's after hours trading. And like, there's no reason for this wick right here, but that's exactly what happened. Somebody had some agreement right there. They matched them up. So that eventually does get printed. I guess, okay, so stepping back, but bid ask, basically what they're saying is, because we don't pay commission, that the bid ask is going to be wider. So maybe when I'm opening up a put credit spread and I'm collecting $1.07, maybe on another platform I could have collected $1.08 or $1.09, but we're also paying a $3 or $5 or $7 commission on that trade on the other one. It's a really silly, it's a silly argument, because we're also able to make these trades. We're also able to make these trades like and collect like a few dollars worth of premium, where on another platform you would pay so many fees, and it would just like totally negate your profit at that point if you're just trying to collect a few dollars. So I don't know what they want. They actually talked about this in Congress too, where the guy's like, this is such a silly moot point. This gives us all access to it. The like, and speaking of fees, I had a super old account. Like, I was probably 19 years old, put some money into Microsoft at Smith Barney, and then I just, like, a few years ago I remembered it, and I went to go track it down, and they're like, yeah, your account was shut down. They had whatever management fee that they had, and that used to be the way of doing things. You used to have to go into the place, and I probably wrote them a actual check or handed them cash, bought some Microsoft shares, and just like over the years they charged me $5 or $6 a month just for me to have an account. Like, I think checking and savings accounts used to actually have a monthly fee, and that was like a big thing when they started not having fees. So the fact that we don't have any actual transaction fees, huge. But that's the criticism, basically, is that the platforms where you're paying commissions, you get a better fill, but you're not paying commissions, so we don't even have to account for that. And the thing that sucks is on the other, like on Tastyworks and stuff, like, you might feel like you're making some profits, but then you go and look how much fees you paid over the year. Like, that, it adds up. It adds up to a lot. I notice you roll out your spreads. May I ask why you roll them instead of closing them for a profit? Yes. Well, by rolling them out, I am collecting a profit. So, that's what's happening really at that point. And essentially I am closing it out and opening up another position. And what I want to do is just keep that collateral going. Like, let's see, because that, and then what am I going to do? So, like, if I just close them out and take a profit, so like, so I open them up, collected $100, close them down for 10. Great, I have a $90 profit. Then what I'm going to do? I'm going to open up another position. So instead of just making that in two separate transactions, I'm just going to do one transaction, get it rolled out, and that's it. Just be done. So and that's my plan with the account. That's the majority of what I play, is just keep that collateral rolling. If we can collect 5% a month on $100,000, that's fantastic. If we can collect 10, 15, 20, whatever, it all adds up over time. And I do, some of them I will close out. Like, if there's something I'm like a little bit unsure about, or kind of during my transitional period where I was going from where I had things open up on some names I didn't care, like Google and Amazon and stuff, and realized like I don't need to play these other companies. I'll just stick with Tesla. So those ones I'll close out, or Iron Condors, I'll put in a closing order on those. Does rolling out save you any money on commission fees versus closing it and opening new on a later date? I actually don't know. So obviously in Robinhood with no commission, it doesn't, but it also I think can take care of some of that spread between bid and ask, that's one of the reasons I like it. It has a placeholder within the stock price, especially since it moves up and down so much. So semi placeholder, and I'm actually not sure on like TD and Tastyworks. I probably should know that. I probably should. But also at the end of the day, hopefully I'm not making the plays to collect $3. Like most of the plays, it's $50, $60, $100 or something like that, where the commission doesn't really kick your butt. I mean, but on a $50 profit, $3 is a good chunk of it for sure. Oh, see how long have we been going here? Because I think I need to go pick up my girlfriend to go costume shopping. I think she's done working. Dang, almost 2 hours. Super fun. I guess it's almost 3 o'clock. If you guys have any last minute stuff, thanks for the rocket ship. Thanks for donations too. It's just absolutely amazing day. It's so crazy like how much you appreciate those small things. It's super awesome. Um, yeah, it's super cool. Always look forward to your videos. Awesome, thank you. Are you gonna be a Squid Game person for Halloween? No. I didn't buy anything. I don't know. I'll probably be whatever's left over, or probably nothing. I don't know. We're going to I think we're going, it's either a show or some, I don't know, like a place like a club kind of thing at a casino, and we got a table because my girlfriend gambles a lot, and so we get like VIP VIP stuff. That's all I know. Yeah, you're welcome, guys, and thank you guys so much for showing up. I super appreciate this. This is exactly what I wanted, and this like size is almost perfect too. Like it's not like 100 people and chat's going crazy. I think we hopefully got to everything, um, and it's a lot easier, kind of like just back and forth too. So this is absolutely amazing for me. Make sure you gamble on Tesla. Thanks. Thank you, thank you, thank you. All right, love you guys, and hopefully we'll see you during the week and next weekend. And you guys have a great Halloween. Stay safe. Love you guys.